Hey, good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great Labor Day weekend and had some time off and got to enjoy time with family. The opposite of labor, if that's what Labor Day weekend's all about. Anyway, so we have a lot of interesting things that are going to be coming up this week and kind of some cool updates that we had last week. Expected updates, but for the most part, it's going to impact things moving forward. Before I get right into it, I'm going to do a quick dad joke for you guys. What do you call a cute door? A cute door. It is adorable. Adorable. Get it? Pew, pew. All right, so getting right into it. Last week, we got the two inflation datas for the month of August. Now, those two inflation datas went up as expected because of how inflation is calculated. Some of the previous numbers come off, which were lower, and some came on, which is a little bit higher. Either way, with the inflation reports, there was nothing unexpected about those reports. And for the most part, mortgage rates didn't really change all that much throughout the entire week. So if we're really looking at the whole trend of things, for the most part, they were kind of flat for the most part. Now, this week's going to be a big week, and this is the week I've been really talking about since the last jobs report week. Last jobs report week was a big week back at the end of July, basically at the end of July, because that's what caused rates to get as low as they did in the most recent times. So because they fired the head of the BLS who makes the report for the unemployment rate, we're hoping that the person that came in is very much more about the accuracy rather than guessing and modeling and things like that. It's actually the good new guy they brought in is on the side of like this BLS jobs report is completely inaccurate up until they fired the current person. So this guy came in, and we hope that the jobs report that comes out is a lot more accurate and it tells what's going on with the labor markets. So with that coming out this Friday, and there's one that comes out tomorrow, gives us an idea of what the labor market's like. It's called the job JOLTS. So job opening labor something. It's called JOLTS. Basically, it tells us how job openings has been. And then on Thursday is the ADP jobs report, and then Friday is the report on the unemployment rate. So the expectation is that the unemployment rate is expected to go up to 4.3%. Okay, right now it's currently at 4.2. So with it going up or closer to 4.3%, we should expect to see mortgage rates continue to get better, even better, probably the same, or as we hope as big of as a move as we saw the last time the unemployment rate went up at the end of July. So looking at the charts of what we're trying to see now, let me share my screen real quick with you guys. Here we go. So this is what we saw pretty much all of last week. Pretty much things were pretty much plateaued, straight line, nothing really to see. What we hope is that what we saw at the end of July when this unemployment rate came out, it kind of brings down mortgage rates just as much, maybe. So we could see, and again, this blue line's conventional rates. So if we see, government rates go down the same amount, maybe come down to here, we should start, getting into more of the, low sixes, high fives, more specifically. So that's going to be a really exciting thing to see this week. There's a very strong chance I'm going to lock up a lot of my clients this on Friday, just so things are a lot better than what we expected. So that's my mortgage interest rate locking strategy is based on the unemployment rate now. I'm not expecting a whole lot that's going to be coming out of the inflation reports anymore, just because just the way it's calculated, the amount of time they look at, it's not expected to change a whole lot. If anything, it's going to probably for the next few months, probably going to show that it's going higher. But it's not really the case. It's not saying that the inflation is going higher, just how it's calculated. It's calculated based on the previous 12 months. So that means the current 12th month comes off, and then the 11th month becomes a new 12 month as each month goes by. So it's called a running average. So with that in mind, I don't expect a whole lot from the inflation reports now. I'm looking more forward to the new unemployment rate, because now that they get a new president, effectively new head of the BLS jobs report, or just BLS in general, We hope that this person comes in is able to give us way more accurate numbers, give us better revisions on the previous reports, and show that, hey, we are, our labor market's not doing as well as everyone thinks it does, or what this computing modeling thing does. So otherwise, that's what I'm looking forward to this week. If you guys have any questions, let me know. Otherwise, that is all I got for you guys today. Nuke out.